Everybody's got this opinion that the Strait of Hormuz is going to be open in 10 days to 2 weeks. What if it's not until next year?
What, if anything, will make stocks draw down 15 to 20%? Seems to me you just answered that. Is that correct?
Right now, the concern is no one wants to sell because they all roll their eyes and say it will work itself out. It always does.
I think the big tech is acting as a global safe haven trade, meaning that people realize that Microsoft, Nvidia, they don't give a shit if oil's at $100 a barrel.
You don't need to hire a bunch of expensive engineers anymore to make software. You just need to pay $20 a month to Anthropic and get Claude. It was a spreadsheet that probably would have took me 2 or 3 days to do on my own, and I had it done in 30 minutes.
Welcome to the Future's Edge. I am Jim Bianco. That's Bob Iaccino. Before we introduce our guest, who definitely doesn't need any introduction, I will thank our sponsors. One, we often complain about the food source being the food supply being taken over by big conglomerates, and it's true that it is. But there is something we can do, and that's to patronize small independent operators like Marco at Independence Arc Farm in Arkansas. Give him a call. His food is amazing. Grass-fed, grass-finished beef. Also, Dana Samuelson, American Gold Exchange. It's probably time to own physical gold and silver. It seems like the path ahead is kind of rocky, which is what we're going to talk about with our guests. And lastly, Bobby and I are 2/3 of the three at unfilteredinvestor.com, which is our biggest and most important sponsor. Please check us out there. We have Jim Bianco, who is the president, CEO, Grand Poobah of Bianco Research. How are you, James?
Fine. How are you guys doing?
Good. Are you back in the Midwest, back in the Chicago area?
Back in the Chicago area. Went to the Cubs game already. They're now in first place.
Which one were you at? You were at Thursday. So was I, right?
Yes, I was at the same game you were at. We did not coordinate. Otherwise, we could have met up.
I would have liked that. Yeah. I'm not retired, but I got rid of one of my jobs. So this is the third week of me having like 25 hours of responsibility in a normal week instead of 70. It's a very interesting adjustment, but I did go to the game on Thursday. What a great day and a great game, wasn't it?
Yeah, it was. It was a really good game. And you're right. The weather, going to a late April game is so iffy. It can be raining, but it was 80 degrees.
Yeah, perfect.
What are they,
Which
10
I don't
and
go.
1 in the
I don't
last
plan on
11?
go. You go. What's that, Bobby?
Are they 10-1 in the last 11, or did they win 11 in a row, or what?
10-2 now.
10-2? Unbelievable.
Yeah, but I don't, Jim. I don't go to games unless I buy the tickets the day before, or the day of, when I can confirm that it's going to be a gorgeous day. I don't want to sit in 48-degree misting weather. I'm not going to do that anymore. You?
Then I guess you're not a Bears fan.
I would never go to a Bears game. The last Bears game I went to, it was 100 degrees on the field. It was the first game of the year against Jacksonville, and it was a complete shit show. They were taking people's water bottles as they were going in the stadium because everyone wanted to have water, and then there was no water in the stadium. It sold out in the first quarter. I saw ambulance in my section 3 different times. So the Bears, I sent them letters like, this is ridiculous. They didn't seem to care.
Mm-hmm, mm-hmm. Yeah.
Yeah.
We already got questions coming through on Twitter.
Yes, okay, I'll get to it, Bobby. Bobby's saying get to it. Bobby, you ask the first questions from the guests, and I'll come up with my questions then.
Well, basically, I want to know your sort of macro stance right now. I mean, obviously, the stock market is rebounding from everything, and people are learning that it tends to do that. It rebounded from the tech bust. It rebounded from 9/11. It rebounded from London train bombing, Madrid train bombing, great financial crisis, COVID. It always rebounds, right?
That's right. And as a matter of fact, in the near term, it rebounded, as you said, it rebounded from COVID. It rebounded from 9% inflation. It rebounded from Silicon Valley Bank, and it rebounded from Liberation Day. And I think what everybody's saying is that don't confuse me with details. This will work itself out. The oil will start flowing. It will all eventually be okay. So
what I'm trying to figure out, is there any sarcasm there or no?
Well, I think that the problem is that they've gotten burned so many times by being told to sell that they're not going to sell. My concern is that what is not being figured into this, in fact, I was just talking to somebody 20 minutes ago, and I said this exact same thing. Everybody's got this opinion that the Strait of Hormuz is going to be open in 10 days to 2 weeks. Since the third day of the war, we've been saying 10 days to 2 weeks. What if it's not until next year? Then we've got a real problem on our hands. if it's not until next year. And that's where my concern comes in, and that this might be very long and very protracted in order. And notice what I'm saying here, the Strait of Hormuz. I'm not talking about the war. I'm talking about getting those ships moving through the strait. If they were moving through the strait from day one, how much different would this war be? We probably have this conversation today and barely mention it at that point, because it would be about as important as Venezuela or what's happening in Cuba. Those are not economic events. They're very important political events, but they're not economic events. This is a hyper economic event because of the Strait of Hormuz. And that's really what we're talking about, is getting that open.
Well,
and that's where I think.
I'm sorry, Jim, but you said next year, implying that the problems don't start to really crop up and become, and not insurmountable might be the wrong word, until next year or sometime within the next 3 months. What's your thoughts on timeline?
Well, that's the point, is that everybody, I keep hearing people say all the time, well, if the strait opens tomorrow, it'll still take 3 months to resolve all of the issues and stuff. But their assumption is that it's going to be announced that it's going to open here fairly soon. And so what I'm afraid of is that's not going to happen. And I'll tell you why it's not going to happen. And I'm going to say something that's going to piss off a lot of people. The military is, I'll just say it just to get the point across. The U.S. military blew it in some ways. The U.S. military, I didn't say Trump, I didn't say the political class, the U.S. military. They don't have an answer for hundreds of drones being fired at either their Gulf state partners or at ships. And this is the problem. The Iranians know this, and we know this too. And since there isn't an answer for it, we're at a stalemate. No ships are moving. No Navy ships will move into the strait. Everything just sits there and does nothing. Now, we're not even shooting at each other, but the ships aren't moving. What I've been putting on social media is we've got no war, we got no peace, we got no shipping, and we got no oil, LNG, fertilizer, or helium. And that seems to be the state we're going at. What's it going to get the ships moving? It's going to get some confidence that they're not going to get shot at if they start moving through the Strait of Hormuz. Well, what would help for that is if the U.S. military parked a big destroyer right in the middle of the strait and said, come on, guys, shoot at me. We're going to knock them all down, and we're going to show you that it's safe. They won't do that, the U.S. military, and no shipping is going to move. And as long as Iran plays this game, this can go on for a while. I'm not forecasting that. I'm saying that's my concern. My concern is that is not in the market. And the price of oil will continue to go up in an irregular manner and up and up and up until we get some kind of resolution to this.
So Hegeman on Twitter, Jim, said, what, if anything, will make stocks draw down 15 to 20%? It seems to me you just answered that. Is that correct?
Yeah, I think so. I think that right now the concern is no one wants to sell because they all roll their eyes and say it will work itself out. It always does. 9% inflation did, Silicon Valley Bank did, Liberation Day did, COVID did. They were all buying opportunities. This will work itself out. What will get people to review that? This is going to go on for a long time, is if that narrative were to take hold. And right now, that narrative isn't around. Even among the bears, that narrative isn't around. The bear argument is, even if they open the strait tomorrow, it'll take 3 months to get everything back to normal, implying the strait will be open tomorrow. That seems to be why everybody's saying, well, then I'll just hold on, it'll be okay.
So just to let people know, we are looking at Twitter. For those of you that can't get your questions answered in the chat here, Shadow Pro, who Jim and I both know individually, said Jim Bianco is a red button guy, isn't he? Now, do you guys understand that the way I understand it?
Yes, you understand.
No, what's
Jim,
a red button guy?
Oh, man, you are above this whole Twitter thing that's been going on for days. The guy who put out the poll about the red versus the blue button. Stop me if at any time it rings a bell. So the hypothetical was that there's a red button and a blue button, okay? For the blue button, if over 50% of the people, the entire population, presses the blue button, everyone will be saved. If you press the red button at any time, you individually are saved. Okay, did I explain that right, Bobby? So the
Yeah, that's
question
exactly
becomes,
right.
and I put out that the red button is essentially there's no real threat, no danger. Everyone could just press the damn red button. It's like press the button and nothing happens to your life, or press the other button and you're playing some high stakes game of musical death chairs with other people who are going to do good to save people. What do you guys think?
Wow,
I'm red button.
that's a heavy one. Go ahead, Jim.
I'm red button. I'm done. I'm done.
Yeah,
It's
I
after
guess I'd
saying
go
that.
red
I'm
button
red
too.
button.
It's what logical people do. It's like saying I don't want to play. Play your stupid game. Yeah. But anyway.
I want to be
Exactly.
involved with this.
Exactly.
There's your answer. We're all red button guys. By the way, I predicted before the show that you were a red button guy too. So you and Bobby both, even though I did put that out on
What do I
Twitter.
win?
So
Do I win some short ribs?
You do. You win some ribs for sure. Right. So come to Brand. Funny story about the ribs, and God, Walt's going to kill him for telling us. I'm walking around the restaurant about a week ago, and I swear to God, we're getting back to markets, and I hear about 4 different tables say, "Wow, these ribs are bad. These ribs are..." So I quickly order some, and they're so salty I can't even eat them. We find out in a couple of days. We think what happened is that somebody rubbed them with the taco seasoning instead of the regular rub that we use. So we had a whole day and a half of awful ribs. By the way, our people who are coming, our ribs are back to normal. They're the best you'll ever have. Jim, you've seen probably that tech stocks have shot through the roof since those March 30th lows. Okay. My thesis is this. I want you to tell me I'm wrong. I genuinely do want you to tell me I'm wrong. I think that the multiples obviously came back to normal with the price going down and earnings estimates going higher. But I think there's more to it than that. I think the big tech is acting as a global safe haven trade, meaning that people realize that Microsoft, Nvidia, they don't give a shit if oil's at $100 a barrel. That doesn't affect their margins at all. They're cash cows. They got fortress balance sheets. I think institutions around the globe are buying big tech. Do you think I'm crazy?
No, I think that there's something to that. And I'll throw one other thing at it. You're right that tech stocks have been going up, but what tech stocks have been leading the charge higher right now? It's
AMD
been the
and Micron.
semis.
Yeah.
Yeah, the semis, which were what I even looked to see how they're going to close today, but we're not closed yet. But they were up 18 days in a row, and they're just screaming higher. What's going on here? Helium is an important process in making semiconductors. It's the one thing you need to super cool some of the equipment for this, and you can't replace it with anything else. And a lot of that helium comes out of the Persian Gulf. It's a byproduct of natural gas exploration. There is going to be a slowdown in chip production. There is not going to be a slowdown in chip demand. So we're just going to be paying more for chips. Oracles and the AMDs of the world are just saying, you know what? We're going to get a lot more for our product than we thought we were going to get. And everything is screaming higher right now. So, yeah. And I think that part of that is what you just said. Doesn't matter if the price is $100 or $10 for crude oil. This product is kind of, running on its own cycle. And I think that that's what's going to keep going up. And it's more than offsetting the other side of Silicon Valley, which is the software stocks. And the software stocks continue to get crushed, like the Salesforces of the world and the ServiceNows of the world. And they're getting crushed because of AI, and that the cost of producing software is collapsing to zero. You don't need to hire a bunch of expensive engineers anymore to make software. You just need to pay $20 a month to Anthropic and get Claude and have Claude Code do it for you. And because the cost of creating software is going to zero, the market is afraid that there's going to be many new entrants into the software market that are going to compete with the legacy companies. The legacy companies have got a real problem on their hands, and that's why they're struggling as much too. So what's happening with tech is you've got the semis going up and you got software going down, but overall it's driving it up because there's more semis right now than there is software.
So you're telling me this is basically the same thing as oil majors going up when crude oil goes up? That's basically what's happening in the big areas of tech.
Margin expansion.
Yeah, margin expansion. Yeah, I think that's exactly what's going on with it right now is margin expansion.
Because that's one thing I was confused about. You had basically a 5% drop in tech. Let's use the NASDAQ 100 future as tech. You had like a 5% drop basically from the end of January through February, last couple days of January, first couple days of February, it was a 7% drop from high to low, 7+. And then we get not a resolution to the war, not a resolution to reopen the strait, and we're at just new all-time highs over and over and over again. Can the NASDAQ tech sector drag the rest of the market with it? Or is this sort of a one-trick pony?
No, I think it can for at least a little while. You're right. I mean, we've One of the things that's definitely helped is that we've washed out the software stocks so bad that it's going to be hard for them to continue to lean on the market lower. And we're in this second wave of AI that's kind of got the old Mag 7s kind of going again. And we're starting to see a bunch of the mega cap stocks starting to move up, with the exception of maybe Microsoft at this point. And they're moving up because of Agentic AI. That's got since OpenClaw was announced in January. Agentic AI, just for those that don't know what this is that AI really kicked off in November 2022 when the free version of ChatGPT became available. That was prompt and response. That's just a Google search on steroids. Ask a question, get an answer. That's what you had there. But in January, with OpenClaw, what it was give AI control of your computer and now tell it to do things. Open a file, read a file, create a file, create a spreadsheet, write software for me, then execute the software. I don't have to touch the keyboard to do any of this. That's what's gotten the second wave of AI getting everybody excited, is that it's no longer just a Google search on steroids. It's actually a replacement for you, or it will do things for you as opposed to just answering questions. And that's why we've seen this wholesale move with AI like we have over the last, 2 months or so.
It's crazy. And I know this is just a small anecdote, but I use this thing more than my keyboard now on a regular basis, whether it be to put voice prompts into AI or even to voice chat to my computer when I write an email or something like that, because it's just quicker than my 2-finger typing. Go ahead, Jimmy.
My question to both of you guys, start with Jim, is which one should I pay the $20 a month for, and why do I want to pay the $20 a month? Jim?
Well, that's a good question. Now, I use all of them, and I pay all of them.
Yeah.
And the answer is they're not Coke or Pepsi. They're very different. It depends on what it is that you want to do right now. If you're looking for deep research and deeply understanding a topic, I think Perplexity is probably the best. If you're looking for, basically the prompt and response, I think ChatGPT is the best. If you're looking for coding or for complicated types of things there, maybe Claude Code might be it, although Codex from ChatGPT is pretty close to that. If you're looking for an update on recent news and to keep abreast of what's happening, Grok might be the best one to use there. And the other amazing thing about it is, I'll stick with Grok. Elon has announced, Grok 4.3 came out, and you don't need to know what it does. Just, I want to give you an idea of the speed at which everything's going. He announced that he's going to have some plugins for Excel and for Word and for Outlook. And then they're going to release Grok 4.4, and then they're going to release Grok 4.5. Grok 4.4 will be out by the end of the week. Grok 4.5 will be out in 2 weeks. The plugins will be out next week. I mean, if you...
The bots are taking over.
I know. I was going to say, the point is, if you go to AI and you look at it and go, I don't like it, it's not doing what I want, check back next week. It's changing that fast right now.
That's crazy.
Really is. There's 3 or 4 major upgrades or announcements almost every week with this stuff.
It's
so it depends on what it is you're trying to do, which one you want to use, because they all have their strengths and weaknesses.
I'll give you, knowing the amount that I know about what you do on a day-to-day basis, Jim, I obviously don't know everything that you do. I'll put my 2 cents in that. I think Bianco's absolutely right about the quick response ChatGPT. Who started in this movie? ChatGPT is the best. I think the free one is fine for that kind of thing. I also use ChatGPT to reword things that I read. I'll read a statement I wrote, even if it's in an email. I'm like, okay, that just sounds ridiculous. And I'll just drop it in there and say, rewrite this, please. And it's like that. And it's almost always perfect. Claude, to me, is the best for writing. If you have to write something, you can literally dictate it to Claude. It'll spit it out. It'll be wrong. You can make some tweaks, but the structure is correct. My wife was teaching a mixology class the other day, and these were her notes. I actually still have them here, right? And she's supposed to be teaching a class with this chicken scratch. So I said, do me a favor, read this into Claude, right? And she got a 3-page script with bullet points and all this, and it was just like that. And then I think Jim is right about the deep dive into complex tasks. I think Perplexity is the arrogant AI. Like you say something to it and it answers no. And you're like, what do you mean no? Like, give me more, but you give it a deep task. And also, Grok has really good current information.
because
So,
of Twitter.
like, where's aluminum traded the last couple of days? Boom, Grok has it, but it just structures it in an ugly way. So,
Yeah.
I subscribe to all 4 of those I just mentioned, by the way, and there's more out there. If you guys
Yeah.
want to really get scared, watch Companion.
What is it?
It's a movie. I
Is it
think it's
really?
on, I don't know if it's on Netflix or Amazon or it's on HBO Max. Companion is a troubling movie. Stars Jack Quaid. What's his name? Quaid's son?
Yeah. One of the
Dennis
two
Quaid.
Quaids.
Dennis Quaid's
Yeah, Dennis
son.
Quaid's son. Yeah.
It's frightening. I'm not gonna tell you why it's
Okay.
frightening, but you look at it and
All
when you
right.
hit that point where you get what's going on, it's AI robotics. That's what it's about.
Got it.
But when you get what's going on, you're like, holy shit, this movie's nuts.
So speaking of frightening, let's move on to the bond market.
What were you gonna
So
say? I'm sorry. What were you gonna say, Bianco?
Jim was about to say something. I saw your lips were about to move. What were you going to say, Jim?
I was just going to say, just to give you an example, I use Cowork at Claude Cowork, and they have a function called dispatch. And dispatch is a fancy way of saying you turn your computer on, you turn on Cowork, and then with dispatch you connect to your phone. And away from my computer, literally walking my dog, I would talk to my phone and tell dispatch, create an Excel spreadsheet, go get this data from this source, line it up here, and I needed to do some modeling and put together, a sophisticated model. It did it. And then I said, put together some charts and some statistics on the model, put together a table that I could use in a presentation. It did it. I did it all with these on while I was walking my dog. I never was anywhere near my computer. And it was a spreadsheet that probably would have took me 2 or 3 days to do on my own, and I had it done in 30 minutes.
Are you
So, I
able to
mean,
tell
that's what's
right
happened
away,
with a lot of
guys?
this
Like
stuff.
when you've used AI, this is to both of you, you're able to tell, okay, that's wrong. Because that's something I experience a lot. Like maybe it's my prompts, but I'll put something up there and I'll be like, I'll read, I'm like, okay, that's wrong. It's just not right. I just looked at the Bloomberg calendar and that's not where German GFK consumer confidence was. So let me
Yeah, I know.
rewrite this.
Yeah, I think a lot of it is the prompts too, because I think what you need to do with your prompts, and then we'll go to the bond market, is you need to tell it what you want and you need to tell it why you want it. Don't tell it what to do. Let it figure it out. Just tell it what you want and why you want it, and then it'll figure out how to get that answer. I think that's the best way to do your prompts right now.
I love that. I love that. Okay, now finally the bond market. Okay, when the bombs started flying, 10-year yields were at 3.96. They shot up to 4.44. It seemed like the common narrative was that, inflation expectations, crude oil, blah, 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 makes bonds less likely to hold. I thought that was about half of it. I thought the other half was wars are expensive. We're already worried about the amount of supply that needs to come to market to satisfy our non-war lifestyle in this country. A lot of bonds need to be sold to satisfy war. But since that time, I'm not sure if I'm right. What do you think on that?
I think you're right. Wars are expensive, but I would argue 2 things. First of all, let me answer a big picture question, right? Why does Venezuela have 100% interest rates? Why did Japan a year or two ago have 0? Why do we have somewhere around 4.35%? What is the general idea that one country's 100, another's 0, one's 4?
Risk.
What's its nominal growth? Let's start with nominal growth.
Okay.
Nominal growth is inflation plus real growth together. And you're right, risk is embedded in there too. So in the case of Venezuela, I'll keep the example not accurate, but simple. They had 110% inflation. They had minus 10% growth. They had 100% nominal growth. So they had 100% inflation, interest rates. In the case of Japan, the combination of real growth plus inflation equaled 0. They had 0. Now they don't have it today. I'm talking about 2 years ago. So what's happening in the U.S. is I don't think $100 oil is impacting the economy. It's not dragging it. It is in the margin. It's not dragging us down. Look, no one likes the prices we're paying at the pump, but it's not causing us to see serious declines in economic activity. But what we are seeing is more inflation. The inflation numbers were 0.9 in March. They're probably going to be about 0.5 in April right now if we go with the estimates. We're probably looking at 3.5 or 3.6% year over year inflation for April. And those are going to be, and so inflation's going up, nominal's going up. And that's why interest rates have been trending higher. Now, where the growth is really hurting, because you could argue that's an example for the US. What about globally? Well, what about what we're seeing in Australia or the Philippines or India? And the answer is we're seeing some real hits to their economies right now because they just don't have high prices like we do. They have flat out shortages. You go to the petrol station and there is no gas, and there's fistfights for whatever's left in the final pump that's still working. We're not at that point. The next place that would come to that point, if my fear is correct in that this war in the Middle East drags out or the Strait of Hormuz stays closed for an extended period of time, the next set of shortages is going to come to Europe. It'll come to the US last if it ever gets to that point, but we'll still pay higher prices. So I think that all things being equal, we're seeing more inflation than we are seeing the economy get dragged down. So we're seeing higher nominal growth. We're seeing higher inflation. Now, embedded in there is what you said, right? Is that what is one of the biggest drivers of inflation is government spending. And if the government is going to spend an obscene amount of money on a war, that is going to be inflationary. And that will push up nominal growth, and that will push up inflation.
So Donald Trump, I'm sure if we had him on the show, he'd be saying like, yes, so we then in the U.S. would become the supplier of last resort. There's ships that are speeding around the globe, empty ships coming to U.S. ports to fill up. And if we even keep this shut down for forever, all it's going to do is boost our own production. Is there any shreds of truth to that?
Eventually. And the
How
eventually
long?
is years. And I'll tell you for years for two reasons. One, we export about 4 million barrels a day. In order for us to ramp up to say 6 to 8 to kind of fill in one of those gaps, that's going to take time. But the other thing that's going to take even more time is a fully laden tanker. Tankers only go about 14 miles an hour. 15 knots or 13 to 15 knots, call it 14 miles an hour. A fully laden tanker with 2 million barrels of crude oil coming out of the Persian Gulf takes 21, 22 days to get to Asia. Turns around and comes back. Fully laden tanker from Houston to go to Asia, 52 to 54 days. So you're going to need a lot more tankers. So, I know that Pete Hegseth talked about there's a conga line of tankers coming to the U.S. Yes, and they'll all get full, and then there won't be any tankers for 40 days because there is no tankers. They're all going to take 40 or 50 days to get to Asia, unload, and take 40 or 50 days to come back to the U.S. So we're going to have to double the fleet of tankers in the world. We don't build them. China and South Korea build them. And it takes a while to build the tank. So yeah, if you told me the Strait of Hormuz would never open, could the world adjust to it? Sure. After a couple of years of $200 oil, we would eventually adjust to it. But if your answer is, no, could we adjust to it by Thursday? No, we're not going to adjust to it by Thursday. So it's all about, expectations.
I can't really add to that except to reiterate what I've said before is that the U.S. doesn't produce all types of crude oil. So this talk about us being energy independent, over the last decade has always been we produce enough oil to change our oil for other types of oil without any problems. They're not fungible.
To trade it for other types of oil. You said change, you meant trade it, right?
Yeah, exchange it. Right.
Yeah, right.
You can't change one type of oil into another, although you can make sour crude into distillates, and you can make light sweet crude into gasoline and that we
Bobby,
use.
Isn't that why we get these statistics that people scratch their head about that we're both like an exporter and an importer at the same time? Because we export, our refineries do not refine the type of crude oil we drill for. So
100% right.
We export that to other countries, and then we import different grades that we don't make here in order to refine it into gasoline. Why don't we change our refineries in order to refine? That's ridiculously expensive. That's why we don't do it. It's not just, just add a little bit more of this chemical here and take that chemical out, and you can put a different grade of crude oil in. No, it's many, many billions of dollars in order to retool a refinery for a different grade of crude. And that's why we just been doing it this way, just because it's been the most efficient.
The CEO of Exxon years ago, I think his name's Woods, maybe.
Mike Worth.
Mike Worth. He said 10 years ago, there will never be another refinery built here. So you either have to retool the ones we have, or you have to do what Jim said and just send ships and receive ships. And we also export refined products for the same reason, because we're refining more than we need, not on a daily basis, but often. So we export the refined products and we exchange that for the heavy sour that we don't drill. So it's not possible for one place to be energy independent. In other words, to close their borders, say we've got what we need and be done with it. Not unless you shift the structural needs of the economy, which would take multiple decades to do. It's just not realistic.
Okay, can I pivot again towards, so Jim, you know that Bobby and I over the last 5 years, we've been banging the drum for gold and for silver. Well, not silver as much, Bobby, that's more me. Copper, things like that, which is part of the dollar debasement trade. I actually, for people watching, I didn't tweet this out, but I did put on a put structure in gold on Friday because the chart to me did not look particularly good, based a lot of it on Mike and Bobby's technicals, but I triggered it a little bit before they would have, but it's making a little bit of money today. I still think in the long term, I want to be long those things because I don't think the debasement trade is over. What can you add to that, Jim?
Could you give me a definition of what you think the debasement trade is? Because
Sure.
I have a definition and it might be different than yours.
Sure. Just absolute profligate government spending that's wearing down the value of the dollar, just like waves breaking down rocks. And what people who are going to say, stop this ride, I want to get off. Whether it be Bitcoin, whether it be gold, just a no confidence vote in the stewardship of fiat currencies, particularly the US dollar. Is that a good definition?
Yeah, that's a good definition. So at least when we talk about the debasement trade, you're not saying, I want to, because this is where I push back. You're not saying everybody out of the dollar into euro or into the yuan or
Hell
into
no,
the
hell no.
yen,
But, and I'll even add to your question,
that they're
because
all equally bad.
yeah, no, there's no question about that. And even the de-dollarization that central banks have attempted over the last since 2022, and they're stockpiling gold just kind of in case, I still think that's folly long term. I don't think there's anything that can replace the dollar, but I don't need it to be. I just need enough central banks to think that to fuel the gold trade, which we had over the last 3 years. Now they're using their gold to prop their currencies, et cetera, et cetera. But I do not believe that there is a suitable alternative to the dollar, if that's your question.
Yeah, exactly. Because the dollar, there's a store of value median of exchange. And as far as the median of exchange goes, the Saudis found this out, about 3 years ago when they started making noise that, oh, we're going to start selling crude oil and accept only a payment in Saudi dinars. And that lasted about 20 minutes before they started to realize it doesn't work, because if you sell 12 million barrels of crude oil a day, and it's $100 and it's $1 billion, $1.2 billion a day, that exchange rate cannot handle that kind of everybody trying to get $1.2 billion of their currency every day. It would throw their currency into complete chaos. There's only one currency that's big enough to handle world trade, and that is the US dollar. And it's not going anywhere. Bitcoin has to get 100,000 times larger in order for it to basically, fill that need. And it isn't. And I'm not talking about 100,000 times higher in price. I'm talking about that the infrastructure of it has to get to be able to handle hundreds of thousands of transactions a second.
But also the price too. But also the price,
the price
as well.
would go up. The price would go up because it would become more valuable if it could actually do that. But
Right.
it's many, many years away from that happening, if ever. So the dollar will always remain the median of exchange, is what it is. Now, as far as the store of value, you're right. We've seen some evidence of that. The natural response out of the war was, remember, I used to joke that the natural response out of foreign investors is something bad in the world happened. Step one, put all your money in dollars. Step two, figure out what's going on. And that's basically, that is largely not happening right now, because the step one part, everybody into the fiat currency isn't really getting excited. Now, you could also argue they're not getting in the Bitcoin and they're not getting in the gold either, but they are looking for other alternatives, as we talked about earlier, maybe, semiconductor stocks or something like that. But you're right. I think that as far as a store of value, people are now starting to think in other ways about how to store their money, and that it wasn't just these traditional gold for bad things. The dollar is the safe thing. Run into the dollar when the world is uncertain, that those bromides aren't working anymore. So I'm with you on that part. But if that means that I'm going to walk into a Starbucks and buy it with gold or buy it with Bitcoin, keep holding your breath on that one. That one ain't going to happen for a while.
By the way, did we just totally take
or
the
walk
yen
into Branson and pay my bill in Bitcoin?
Yeah, you can pay it in Bitcoin to me. No, you can't. I'm just kidding. By the way, the yen, like, it's so funny how just one day we woke up and the yen was no longer a safe haven currency. Like, I would love for somebody to like show me like when it happened, because it was just one day somebody asked me, well, is the yen still safe haven? No, but I don't know when it changed. When did it change?
That's Hemingway. The Green Hills of Africa, was it in the book?
Oh, then all at once.
Yes. Yes. How does one go bankrupt? Slowly and then all at once, right?
Right.
And that's basically what happened with the yen. It's you got to the all at once point of it at that point.
Let me ask you both something. So there was a story today out that the U.S. is thinking of taking a 90% stake in Spirit Airlines.
Don't get me started.
For
Don't
$500 million. That's exactly what I want to do, is get you started.
Oh, no. You're underselling the story. You're underselling the story, because now, Jimmy, sit tight here. They're talking about that they want to take a stake in all the low-cost airlines. They want to basically turn low-cost airlines into national companies.
Okay, so the people who are in favor of this are pointing to the Intel stake that turned, I don't know, let me just say $8 billion into $28 billion. I don't know if those are the right numbers.
Close.
I'm pretty close on those numbers. And I say that was wrong. Isn't what this is telling us is that the discount airlines model is a flawed model, number one. And number two, both of you, why is this not the same thing as bailing students out of student loans if you're going to do these kinds of things?
It's just, let me take it first, Jim.
It is.
It's just massive government overreach and socialist policies. Donald Trump is what we used to call a liberal Democrat, 10 years ago. I don't know what the Democrats have become, but he was not, from an economic standpoint, he's doing a lot of things that I don't like. Intel, it's national defense. Okay, next you're going to buy Hormel and say that the troops need spam and it's a national defense stock. This is absurd. It's absurd. Spirit Airlines should have built its house of bricks. So then when the winds changed, they would have survived. They have a bad business model. Adam Smith is rolling over in his grave. They're supposed to go out of business. And by the way, people, if you think that the government taking over the low-cost airlines, that's going to be good, and we're going to have some good thing, I can show you just mountains of history of governments taking over shit that turns to even worse shit. So, Jim, what do you think?
I'll go you one step further. Let me use with the Intel example, and even Trump has tweeted out about how much money that they've made on Intel. I remember when we were bragging in the early 80s. Yeah, I'm telling you how old I am, I guess. We bailed out Chrysler and it worked until it didn't. So, all right, if your metric is that they bought some warrants on Intel to infuse capital in them and the price of Intel is higher today than the day they bought the warrants, check back in 2 years, check back in 5 years. And we'll see where that winds up going before that winds up ending. There was a corollary I saw online. I didn't see the red blue button, but have you seen this one where everybody's been talking about two things can be true at once, right? Sam Bankman-Fried could be a terrible person, and holy cow, does he know how to pick winners? I mean, have you seen it? He had an investment in Cursor, and that now that Elon and SpaceX are buying it, that he's going to make they would have made 116x on his money from his original investment in Cursor. And so people are arguing somehow we should let the guy out of prison and let him be a portfolio manager because he's done such a good job of picking stocks, and stuff. But that seems to be the mentality that we have right now in society is you pick something and it went up in price, so therefore it's correct. I even see this online with a lot of people talking about the war. I'm thinking of one blogger out there that I won't say his name to protect the innocent, and he's been saying the reason that the market has gotten past the war and is railing is oil's not that important anymore, and he's made all these arguments.
Yeah,
huh?
Yeah. I read his thing saying that. I think he's wrong too, but anyway, go on.
Right. Yeah. And what I remarked, and I noticed some people were getting on his case and they're saying, every one of your arguments is wrong And his retort is, yeah, but I said buy stocks and it went up, so I'm right. It's basically, and that's kind of that's kind of the world we live in right now. No, but I think let's wait until the full cycle is over before we see if whether or not government intervention and government ownership turns out to be a good thing. What we have not seen yet with Intel is the government just gave them money and they're still operating as if they're a private company.
Yep.
The next step is when they get the tap on the shoulder, and maybe it's the next Democrat, and says, let me check on your DEI policy. And what is your policy on this? And what is your environmental policies? I'd like to know about your environmental policies. And then they start managing the company. And then it turns into Amtrak is what happens.
There's something else too that we're not talking about here. And by the way, Jimmy, I just want to let you know I've been completely neglecting the in-house chat. And there's a bunch of things that are here that I have to go through.
Hit it off if you want.
When the company takes a profit or makes a profit for the government takes a stake and the stock goes up, they go, the taxpayer had a windfall. Where does it go? To the Treasury. It goes directly to the Treasury.
Yeah.
We don't get any benefit from that because even if you need 1,000 Intels in order to actually make a dent in the debt and actually lower the amount of debt that's owed. And that's not where the money goes. I mean, you got the national debt, I think, increased by 43 trillion. A big deal.
Yeah.
You got a 28 billion windfall. That's not even a windfall. That's a quarter. You picked up a quarter on the street.
Yeah,
it's just ridiculous.
I agree. You know what seemed to start all this was Trump during the height of Doge early last year. He was making some noise that when the government gave Tesla EV credits to sell cars, that we should have had warrants for 20% of Tesla and we would have made $200 billion because it was $1 trillion company. And we were stupid not to do that. Trump likes to talk like that and stuff. And all I kept thinking was, it's easy to say now. If we had think about how Biden distrusted and hated Elon. If he had 20% of Tesla, he would have wrecked that company.
No doubt.
From 2020 to 2024. He would have went in there and he would have run it right into the ground. And that's the fear. Yeah, you can infuse some capital into a struggling company, and then the initial response from the infusion of capital is the stock goes up. But you didn't sell it. You're not going to sell it. Let's wait the whole cycle and let's see how this works. And usually before the end of it, the government's going to try and start running your company, and that's when everything goes off the rails.
Bobby, I want to give you the question for sure, but I want to add one thing real quick because people hear this conversation and we are wholly in disapproval of these socialist things that Trump does.
Yep.
And then I get these questions from liberals who say that, see, are you sorry about your vote? And I'm like, dude, come up with a candidate who's not comical and we can have this discussion. Okay, this is an absurd discussion. I didn't pick Donald Trump. It was a binary. Bobby, go on.
Yeah, so I just want to go through some of these comments in here. Widge said, what's the type of government that merges corporations and government? We know the sarcastic comment he's making.
Yeah, Widge, and we agree with you. Yeah,
and we agree with you, buddy. Tim corrected you, Jimmy. Bobby is correct. CEO of Exxon is Darren Woods. Mike Wirth is the CEO of Chevron.
Oh, sorry. Thank you.
There's confusion
Isn't
there.
Wirth a Chicago guy too?
Yes, but Wirth is the one who made the comment about no refinery being built, I think. So I think
it's possible.
I think it's a combination of everything Bobby said. But anyway, go on. Yeah, I think
Widge also said something here that I'm not sure I understand. Widge said, the thesis has been that the chaos of the Trump terms inoculated markets from overextending themselves. Now markets are conditioned to look past everything. Warranted or not, doesn't matter.
That was my thesis at the beginning of the Trump presidency, by the way, that short-term volatility that's created by Trump may make for a longer-term durable rally. I'm not sure where I stand in it now, but that's what I believed at the time. I don't know. It's been a hell of a rally.
There's some comments from somebody whose Twitter name is in some Chinese characters that I won't pretend that I know how to translate. But he or she said PC. What is it? A policy? Whoever said PC means politically correct. That's it. I think that's pretty much it. Anyway,
Okay.
yeah. So that's just all the quick comments.
But by the way, I want to add one other thing too, is that back a while ago, you used the word retort, Bianco, and for about 5 seconds, I thought you used a different word. And I was like, wait, we've
I did too.
We've normalized. You did too, Bobby?
I did too. I thought it was the R word, as they call it.
Right.
Now.
I was like, wait a second. Are we there now? Right?
Yeah, no, we're
So
not
we're
quite
getting back
there.
there.
Yeah. Bobby, you got the next question. Probably one more for you, one more for me.
Yeah,
Yeah.
that works. So based on what you're seeing now then, was there actually something driving tech down before the attack from the US and Israel into Iran that caused it to fall so much? Was that like the start of maybe the popping of a little tech bubble that we had? And now people are realizing, based on your theory, that tech is actually going to be making a lot of money going forward. What was that sell-off that happened before the Iran war?
Software. It was software that was selling off. And, you know, I'll use my favorite example so everybody understands when we talk about the software sell off. I have a Bloomberg professional service. It's over there. And that's not cheap. It's $2,500 a month. And then plus whatever exchange fees you want to add on to it. The argument is, why is it $2,500 a month? Because Bloomberg employs thousands of engineers and has spent billions of dollars getting that software to work properly. In the world of agentic AI, a bunch of software engineers could start from scratch, and in a short period of time, like a year, they could probably recreate a Bloomberg terminal, do everything he wants, and they could probably do it for $200 a month and make a profit. Bloomberg could never cut their price down that much because they have so much legacy costs. That was the concern with Salesforce, ServiceNow, Cloudflare, all of them, was that everybody's software and everybody's SaaS, software as a service, was going to be under assault by a new entrant. And they kind of made it wrong. I always they said, well, you'll create your own customer relations monitor or CRM. No, I'm not. I'm going to wait for somebody else to come in and say, I'll do it. I'll offer you something that looks like Salesforce for a tenth of the price. And then I'll sign up for their customer service monitor for much cheaper. And so that's what was causing the sell-off, was in the software sector, was really where the software, where it was coming. There was a little bit of deflation too in Mag 7 around data centers and the like. And that's now kind of re-entering itself because during the war now, there's been a renewed surgence on the importance of AI and semiconductors. Quick word about data centers. And Jim, I'll throw this one at you. All these people that are screaming and yelling about we got to rein in data center, and we can't have data centers, and we got to ban data centers from our state and stuff like that. Data centers have been around for 30 years. When you upload a picture to an Instagram, where do you think it goes? When you look at your phone, where do you think all that shit is on your phone? It's on a data center somewhere. It's called the cloud. So if you are in favor of getting rid of a data center, turn in your phone. Turn in your phone because you can't operate your phone for 5 seconds without a data center. And that's been the way it's been since the late 90s. But all of a sudden now everybody wants to get rid of data centers. I don't understand this argument.
Neither do I. And I actually understand, like, when people say they don't want a nuclear reactor in their neighborhood, that actually makes sense to me. The data center thing, I don't understand at all. But we are, in their defense, we are talking about an exponential increase in the size and capacity of data centers. But yes, they have to be built somewhere. And AI is not a train. Yes,
I understand the argument that you have to bring your own power with the data center, right?
Yeah.
That we're just not going to build data centers and then we're going to just, connect them to the grid, pull all the energy off the grid and drive you know what? But the beautiful thing about a data center is you could build it in the middle of nowhere. It doesn't need to be next door to your house. It could be way out there where no one else is what you could do with
So
them.
do you think, so this is, and I love what you just said, but the necessity being the mother of invention, are we going to really start building nuclear reactors, big and small, to power this grid, something that the environmental crazies would have never let us do prior to this? What's going to happen there?
I hope so, because what does a nuclear power reactor have that every other source of energy generation has? It has no pollution.
Right.
It has no pollution, a nuclear power reactor. It just produces hot water. That's all it does. That's why you want them. Now, you could argue, well, that's until it melts down and then it creates a tremendous amount of pollution. Yeah, you could also, say that airline travel is the safest thing in the world until the plane crashes. But the risk of melting down is so few and so far between, and the new designs of power, even the small reactors and the new designs make it such a small percentage chance that you would have some kind of environmental disaster. It's not zero, but it's pretty damn close to zero.
It's actually the
Right
same
now.
reason, Jim, that I'm very pro self-driving car. Jimmy, you have that stat of how many people die every minute in a car
One every
crash.
12 minutes in our country alone. Yeah.
Yeah, and
Right.
we're talking about if
Yes.
everybody's in a self-driving car, Widge is gonna get on me for this because he always does. You're gonna save thousands and thousands of lives. There's gonna be so few crashes. The crashes that happen will be fatal, but there'll be so few that happen that it'll be such a huge improvement to the state of man.
No doubt about
By
it.
the way,
I
do you
think
know how
there's
they're gonna you know how the economics of getting everybody into self-driving cars is gonna
insurance.
play out?
Insurance.
Insurance, yes, it's gonna be $200 a year for a self-driving car. It's gonna be $8,000 a year for a human to drive on the street, and that's how they're
I
gonna
believe
shove everybody into self-driving cars.
So real
Yeah.
quick before we go, because we're talking about self-driving, Tesla is about to go into production with their car that doesn't have a steering wheel. It is only to be
Yeah, that's the
self-driving, and
robo-taxi.
it's gonna be under 30 grand. That's about to go into mass production, which just said live free or die. I knew he was gonna get on me about that. Um, basically, I have a thesis, and I asked Martin Norton this. I've asked the last 3 smart people we've had on, and Bianco, you certainly fit that description. And I say that with just a tiny bit of sarcasm. I haven't done it yet, by the way, Jimmy, because I saw Tesla's earnings and I saw the 8% drop in the stock. I want to buy Tesla as a sort of proxy of SpaceX's IPO. You think that's stupid or you think that'll work out? I haven't done it yet
That's a tough one.
because we all think they're all going to merge into one big massive company.
I hope not. I hope not that, look at GE and look at the history of conglomerates, is that,
That's a great
at
point.
the end of the day, they really don't have a good track record. That he'd be better off letting these things be independent companies as opposed to everything is one Unimusk company with all these divisions, the space division, the XAI division, the Twitter division, the Tesla division, and on down the line, the Starlink division. Man, it is unbelievable the companies that guy
No
has
question
been
about it. But Bobby, I'll
put
add to
together.
something that Jim says. That doesn't mean that people won't boost the shit out of the stock price
That's
in
all
the
I'm
near
saying. That's all.
term. You know what I mean? And
Right.
then
In the near
before they
term,
realize
they
it's a
will,
terrible
but
idea.
I don't think it's a good idea at the end of the day because the history of conglomerate companies has not been good. Now, maybe they would work under Musk as conglomerates under one roof, but he ain't going to be around forever. And
No,
what
yeah, that's a
happens
good
when
point.
he's not around?
Great
And you've
point.
got to find somebody else to run this unwieldy multi-trillion-dollar conglomerate of different companies. It's going to
Okay.
be a completely different animal.
My last question to you, and this is an important one, a huge important one. If you have the decision right now of whether or not to fire Shaka Smart, are you firing him or are you letting him coach next year?
Shaka Smart, the Marquette coach, and I am a graduate and a proud alumni of Marquette. I'm going to give him one more year.
One
And
more year, because I always loved him as a coach, but it seems like he can't play this portal game as well as some. But I love him as a coach. So, but is coaching
right.
even
He
important
picked up.
anymore? I don't know.
He's now playing in the portal. We'll have to see.
We'll have to see.
What
Yeah.
we'll have to see where he goes. But I know he can't play the portal game. And in his defense, I wish he didn't have to play the portal game because I don't
Same.
think the portal
Yeah.
game is good. Did you see the Brandon Sorley story here today?
No, tell me.
So Brandon Sorley was the Cincinnati quarterback who got $4 million plus a year to transfer to Texas Tech.
Okay.
He just checked himself into a rehab for gambling addiction and admitted that he was gambling on his own games. I know. So
giving $4 million to an 18-year-old is not a great idea, is what you're saying? That seems crazy. Except that I would have been in rehab or dead and have every sexually transmitted disease known to man if you gave me $4 million when I was 18. Sorry about that, though.
$4 million when you're 18, and I'm going to give you an app that you can bet on anything you want by pushing 2 buttons on a screen.
Exactly. Yes.
Then you wonder why he got himself into trouble.
There's no question about it.
That's
yeah.
crazy.
Yeah, exactly. It's really, it's really shocking. And
Yeah.
it's a shame. That's what I meant by, college sports, I think ultimately are broken. I'm not against the players getting paid, but this Wild West of no rules. I mean, at least in the NFL and in MLB and in the NBA, they've got rules. They've got rookie contracts. They've got accredited agents. They've got salary structures. And a lot of that's to protect the players, because a lot of these players, they don't look, there's a salary structure. This is the contract you get. Quit asking for other things. And you need to use, I think the biggest problem they have is with these agents. These agents are just basically grifters that come to these kids and basically rip them off of all of their money.
I believe that as well.
Jimmy, so just real quick, I know we're over time, but somebody has repeatedly put in here, just Bianco, can you do 60, 30 seconds, whatever it is, on private credit?
Oh, good
Yes.
call.
So what do you want to do? All right. So what is the issue with private credit? Give me 3 minutes. First of all, the issue with private credit was that it became very popular after the financial crisis. Why? Because Jamie Dimon in 2011 gave a speech and said something very important. He said, every day we at JP Morgan make office space for 1,000 regulators who come to a JP Morgan office to regulate JP Morgan. 1,000 people. How many people go to Apollo's or Blue Owl or Ares or Blackstone's offices to regulate them? Zero. So in the early days of private credit, 2011 to 2016, 2017, they could say, who's the best credit in the world? Apple. Go off over to Apple and go, what's the best deal that JP Morgan can give you? Well, since I don't have to pay for 1,000 regulators and 5,000 lawyers to watch the 5,000 regulators, I can underprice them. So that's how private credit took off in the early days. Then you get to kind of COVID, post-COVID, private credit said, okay, all the low-hanging fruit is done. So now what are we going to do next in order to find ways to make money? We're going to seek out credits, a little riskier. So what is the type of credit that we want? We want a company with a moat and stable cash flow. What is a moat? A moat means that you can't disrupt this company. You can't come in and create another version of this company and take it all and take their business away. And stable cash flow means their customers rely on this product. They will just pay it. And if you raise their price, like my Bloomberg terminal, you will just have choice 4-letter words and you will write them the check to continue to use it. So what companies fit that mode of a moat and stable cash flow was software companies. So a lot of private credit companies gave enormous loans to software companies. Thoma Brova, which is one of the software companies, I think 80% of their loans are to software companies right now. And they're the one that gave back Medallion, which was one of their software enterprise companies, to the private credit firm at Blackstone, that they defaulted on it and gave it back. So these companies, they were giving loans to software. And it looked like a good idea. Everybody pays, Salesforce. And if Salesforce raises their price, they just pay the raised price and stuff. And then came AI. And all of a sudden, the moat was at question. And eventually the stable cash flows were at question. And everybody is now nervous about private credit because they're so overloaded in software companies. So that's essentially where we're at with this process. I would argue this is a big problem for the investors in private credit, for the private credit companies, and for the software companies. But is it a problem for you or me or anybody else who's not invested in this stuff that is worried about systemic risk? Only if there's two categories, two other things in there. That the banking system has over-leveraged itself by giving these private credit companies enormous loans on leverage to basically purchase to extend this private credit. And if there was some malfeasance, that there was some shady double dealing going on in there. There isn't really evidence of either one. And I say isn't really, those are the key words, because they're private. And it's not that simple to go in and look at their books and look at their filings and say, oh, yes, there's all this lending stuff. If there isn't, I don't think it's going to be systemic. What made subprime systemic was all the lending, the leverage, the double dealing, the shady practices with all those loans. That's what caused it to be systemic. if private credit is just being disrupted by a new technology called AI, and they happen to over leverage themselves, or not over leverage, wrong word, overexpose themselves to software, that's a natural Shumtian creative destruction kind of thing. And I wouldn't be worried about it if I wasn't in that space. But if you tell me banks have loaned to them and they bought this stuff on leverage and they were double dealing to their favorite players and, and shady sidecar deals for themselves, then I would get worried. I haven't seen evidence of the banks over leveraging and, and double dealing or anything like that. So for the moment, I don't think it's a systemic problem. I think it's a real problem for people that are in that industry, but not much more than that.
That was fantastic, by the way.
Right.
That was great. That could be my takeaway from the whole show, because I really wanted to kind of figure out what that is about, and you filled in a lot of the gray areas. Thank you for that. We have to go because our producers have to go
Blue
too.
Owl, right there.
Blue Owl right there. He's a representative of Blue Owl. He's the problem right there because he's Blue Owl.
Right.
No, anyway,
Right.
Thank you. Thank you for joining us. Find him on Twitter at Bianco Research. If you guys aren't following, which all of you are, I'm sure, because everybody follows him because he's the best. Thank you so much for being here. This is the Futures Edge. Thanks to our sponsors, Independence Arc, American Gold Exchange, and most importantly, unfilteredinvestor.com. And we'll see a lot of you people in Palm Beach Gardens next week on the 7th and 8th at the Tradier Fest Convention. Thank you, Jim. Thank you, Bobby.
Thank you.